Hi, everyone. I'm Christopher Thornycroft, and welcome to the Redwood Rundown for the week of Road Check, aka May 13th. We have seen a surge of spot volume posts coming out of major markets on the DAT week over week that reflects how we felt about Road Check going into this week. There is an average of about a 40% increase in load posts week over week out of the 52 major markets that we watch. Those markets are posting on average 892 more loads than they did last year, which a lot of that is just brokers hitting the button over and over and over and over again. It doesn't mean that there's 892 more loads. If anything, we think that shippers have actually started to push some freight out and said, hey, let's see how far we can go without actually getting involved in this road check nonsense. And I don't blame them. I think that's a good move. So that impact is being felt there, at least on the spot side. On the contract side, we're starting to see outbound tender rejections rise. Those were rising heading into the road check event. They went up to 3.9%. We are seeing the reefer outbound tender rejections move up past 5%. That's the highest they've been at for quite some time. So we're really seeing the most amount of pressure that we've seen in a month or so leading up to this event since the end of the first quarter. But everything is moving along with this still fairly, low volume, high contract tender acceptance environment, because that delta between contract and spot is just so large that no one is really turning down their contract freight to go find more spot freight. Now, you may find this week that there was less aggressiveness on spot freight and that people started to pad their rates a little bit more rather than just taking on the full boat of aggressive spot freight because carriers weren't willing to run for that. Carriers were looking at this as a week that they were going to make money. I don't know if it's necessarily happening. I think that they're more just sitting trucks and waiting until this week gets on out. So we'll see what happens. Expect a pretty big push of capacity coming back into the market on Friday. At the same time, expect a lot of volume to be rolled to Friday to Monday, and then get out ahead of that Memorial Day holiday. One quick note before we go over here, before I got get on back over there and deal with road check nonsense. Inventory to sales ratio. We saw that hold at 1.37 to 1 for March. That update just came on out. Again, once we get to about 1.34 to 1, we'll start to see more of that inventory replenishment, but we're just not there yet. Inventory levels are high, sales are high, but there's not really a movement of one of them up or down. So inventory levels haven't risen back up, so there's some stability there. But sales haven't really risen on up either. It's more of a stable environment so far on inventory. So while we are seeing, yes, year over year, some containerized import push, and that's definitely real, it's not to the degree that it is a surge at this point in time. Our 30-day outlook continues to be that there is going to be moderate growth year over year, but not necessarily a surge of freight. And the amount of freight that's moving via rail or moving via private fleet is really suppressing that freight that's reaching that for hire market. And that's not changing probably in the next 30 days anytime soon, although some of the pockets of pressure that we see could change the spot market at least slightly. That's all we've got for this week. Enjoy your road check. Talk to you soon. Take care.